Good morning, everybody. Welcome to the Moving Markets Podcast. It is Wednesday, July the 15th, 2026. The stock market is going to open in just about 5 more seconds. Futures all pointing to the upside, not in any real dramatic way. There's the opening bell, not in some like crazy big dramatic way, but a solid open for everything across the board. Dow was up about at one point almost 0.25%. S&P up about 0.25%, NASDAQ a little over 0.5%. There's the Dow jumping up over 100 points right at the open, and then the S&P up a little bit stronger than futures indicated, and we'll get a read on the NASDAQ in just a minute, also about where futures indicated. So the backdrop for today's move up is not anything I think beyond a really good PPI number coming on the heels of what just yesterday was a really good CPI number. These numbers in both cases much better than expected. I think not just a little bit better than expected, but much better than expected. I don't think anyone expected the CPI number to be anything other than flat, and I really don't believe you can see that the consensus was a point a minus 0.1 minus 1. I actually think the better news is that the prior month was revised down almost in half, more than half down right here, revised down a little bit right here, revised down a little bit right here. Now I've argued this in the past. I've said, I've scratched my head and said, I don't understand how they're off on these numbers as often as they are and have to revise things. It seems like the data, if you're going to have to revise it like that, wait just a little bit longer to put the data out. I mean, what's the harm in that? But look, it is what it is. I know that's a weird phrase to use, but it is what it is. I'm not going to get hung up on it. It's good numbers, plain and simple. And that has the markets up. It has the indexes up because it begins to change the narrative and lessen the idea of a rate hike before the end of the year. Remember, we went from thinking there could be a rate cut this year to definitely there won't be any cuts this year to maybe there's going to be a rate hike this year. And now I think at least for now, it could change and it will change, I'm sure. But at least for now, you remove the narrative about the likelihood, at least you remove the likelihood of a rate hike before the end of this year or the conversation surrounding that. So just, the things have escalated again in Iran. Does it feel, I don't think I'm the only one. It feels like we have just gotten used to the Iran situation now, and it would take something bigger than a day of bombing and Iran lobbing some drones and some bombs into some places we don't want. It feels now like it's going to take a lot more than that to get us really concerned and really shaken up about Iran. So the Iran stuff going on, I think, is just a non-starter. It's a non-conversation. I really don't think anybody is paying the type of attention to it that we were paying to it a month ago and 2 months ago. There was an article somewhere about is Iran becoming, here it is, U.S. launches fresh wave, the risks becoming a forever war. That's one person's, in my opinion, BS opinion. My opinion is that individual that wrote that, it's their BS opinion. This is not going to be a forever war. I am, like many people, feeling like it has already gone on much longer than I would have liked it to, but I don't for one split second think that we are in a situation where this is potentially a forever war. It just simply is not. So I would say to whoever wrote this article, quit the nonsense. It's not it's not at risk of becoming a forever war. Is it dragging on longer than we'd like? Yeah, of course it is. I think that will change, and I still am optimistic that we are not going to be involved in this for too much longer. I don't have a lot today. This might be a really short podcast compared to some. I am going to keep working on the same trades, some of the same trades that we worked on yesterday. I'm going to relook at strike prices. I'm going to relook at mid prices. I still think some of those trades we were looking at getting into, Tesla, maybe Texas or maybe Taiwan Semi again. Definitely Google. I'm going to look at those again today. Maybe different strike prices, and we'll do some things different with the limit orders. But I'm willing to be stingy as I try to get into these trades and not give away too much. I'm not gonna settle for a limit order that changes it from being a good trade to being an okay trade. I want some good trades on right now. So a quick rundown of what we have going. AMD is up. We should be closing that one anytime. Google back up over 360. If you did not roll the Google trade or you did not adjust the Google trade, you may have a chance to exit it today with some profit. I show that I'm up about 5%, and I did adjust the call side of my trade, and I was never successful in adding the put side. So I'm farther out in time, but I'm now profitable by a little bit in Google. I might just exit that and then try to open the whole new trade for the 31st. JP Morgan is now trading almost our short call almost $10 in the money. It's so weird because of option price fluctuating or the volatility of it. I only show us up a few percent, but that will change. I think we're going to get our target profit very quickly on that. Lockheed Martin, weird. Lockheed Martin was weird yesterday. Most of the day it spent up, and then suddenly I've got to do a 5-day chart so you can see this. Most of the day it spent trading up, and then it just cratered at the end of the day and went into negative territory. Spent more than half the day above 520 and then fell off. I'm going to do something with Lockheed Martin today. I'm either going to roll it out in time, or I'm going to look for an off ramp if there's a little bit of a surge at any. It's up a little bit today, and I'm grateful for that. But it needs to have like that little bit of a surge that gets it back up around 520, even if just briefly. And then we might be able to just exit it, or I'll look to maybe roll it out. If we roll it out 1 week, we still have to get out before the earnings next week, unless we turn it into a non-directional trade. Micron down, but we still have a little bit of time left in that one. Netflix up a little tiny bit today. Nvidia up. SPY is up a little bit today. All in all, we're looking good except for Micron. That was up really, really nicely yesterday. Finished with a little bit of gain, but not nearly enough. I hope today it makes a turn and goes back to the upside. We'll keep a close eye on that one. Still a few days to trade for that one to get back over $1,000 a share. That's where we find ourselves. Generally, I would say everything is looking good, and we should be able to exit probably AMD, JP Morgan, maybe Google, all today or tomorrow. So I'm gonna wrap it up right there. Have a great rest. I know that's a really short podcast today, but have a great rest of your Wednesday. Stay tuned to Discord as much as you're able to for some updates on potentially still getting into these new trades. Thanks, everyone. Bye bye.